Hi there, YouTube, and welcome back to my YouTube channel. My name is FXGK Millionaire, and on today's video, we're gonna show you guys how to trade the Boom 500. This step, as you guys can see on the screens, is a step that we previously applied on VIX 75. And on this video, I'm just gonna show you guys you can apply these 6 steps on any synthetic market that you wish to trade, guys. So let's jump straight into this video. And if you're new to my YouTube channel, please don't forget to hit that subscribe button right now. Let's jump straight into this video. So as you guys can see, we're gonna take a look at step one is market structure. How is price flowing? I'm not gonna go so far back, but I'm just gonna read it from this area right here. As you guys can see this red line. Previously, we can say we have this impulsive move here to the downside that break this previous structure. There we can see we have this corrective phase, and then we create this new lower low, and there we have this lower high. Now we can see we did break out of this previous lower high, break of structure, and there we can see we have this descending corrective formation. We basically continue to the upside, break structure, continue to the downside, create this new higher high in this higher low. There we can see we come for the retracement back into this previous area of support. Price got rejected from this previous area right here of resistance, and there we can see we make this move all the way here to the downside. There we have this retracement phase. We also did break out of structure right here and change of characteristics right there. There we can see we have this impulse move, and there we can see we have another ascending corrective formation, and we did break out of this previous structure lower low. So now we can see on our overall daily time frame right now, we are basically bearish on this Boom 500. This is our lower high point, and this is our lower low point, right? We all can see that. Reason for this is our lower low point because right this area did break under this previous area lower lows. So now, guys, we know where we're trading in this market, and we know what is the market structure is telling us. But what we can also notice is that we did basically break out of this previous structures, right? And breakout retest. So now we can just add our areas of support into it. So you guys can see we breakout retest, right? And this is our overall area of interest that you guys that I will most likely will see price to broke out to continue to the upside, right? Because right, we can see that now price is basically starting to create higher lows and higher highs, right? Excuse me. We can see price starting to do that, right? And we can also, sorry for that, and we can also see that we have this trend break out of this area, right? Previously, we basically started to create this lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. And there we have this first impulsive break to the upside, retrace back, respect this area of support, and now we can see we are in this another push phase to the upside, right? We can all see that we are still basically bearish, but we're starting to basically continue to the upside. So that is where we price flow is coming in. We can say that previously we have this impulsive phase, and now we can see price is basically in a potential retracement phase. But I would recommend you guys can still trade this market from this area right here to the upside, because as you guys can see, if you just look at the phases of the market right now, we can see the phases of the market is price is basically trending to the upside, right? We can see we have this higher low, and we can have this, we can see we have this higher high. So now this is the phases of the market. Previously, we can see the momentum of the market right here is basically slowing to the downside. It's a bit slower than the way it was coming to the upside. So we could take advantage once price respect this area of support to continue to the upside. That is what we most likely will do, right? So now we have a phases of the market under control. We know market is in the overall momentum bearish, right? We are bearish with this lower high in this lower low point. We all can see that. But now with the phases of the market, we can say that price now is basically trading in a trending market, right? A trending bullish market to the upside. So we can take advantage of that moves to the upside. So now, guys, let me just remove this. Why is it struggling to remove this thing right now? Okay, so now, guys, let's take a look at our order blocks, right? We could say this is an order block reason right here, so you guys can see where price will most likely come into play. And then we can also mark this area just down here. So you guys can see we have this reason right here, just mark up here, This is a potential area where price can easily come tap into and then continue to the upside. So if price uh, will reject or does not respect this reason right here, we can say price can come into this area and then bounce all the way to the upside. This is one probability that I can see what will happen right here. Or as you guys can see on this candle right here, price is basically starting to reject this market right now, guys, for continuation to the upside. We're gonna take a look now. If we will just see on a smaller time frames where price basically reject this area, like on a 1 hour, 30 minutes, or 50 minutes. So we got our order blocks in check, right? Liquidity, where we can see we have liquidity. We have liquidity up here. So you guys can see we have liquidity up here. We have liquidity up here as well, right? And we also have liquidity up here, right? So now we could say, okay, if price basically show me some rejections now from this from our 4 hour time frame, and we can see we have rejections, we can see we have some price actions like a morning star or any patterns that you guys trading like a double bottom breakout of structure and all of that that you guys can apply to build up confidence to take a trade. I would recommend you guys do that. So if we scale down to our 4 hour time frame perspective right now, guys, just to look for entries right now, guys, let's see, right? So as you guys could see right here, we have this impulsive phase. There we have this descending corrective, and there you guys can see on price flow, one of our steps, price flow, price basically starting to move in this ascending corrective formation, and there we can see price come to the downside, right? So that's why I told you guys it's going to be the best to wait, right, for price to showing us that it wants to continue further to the upside. I know a lot of guys is buying into the market right now, but this is going to be an area of interest for us where we can most likely see price will come into it and then come to the downside, right? Because right, this is an area right now of resistance, guys. Please don't forget it. This is an area of resistance where we can see price can still bounce to the downside. So what I most likely tell my students is that if price is in a situation like this, wait for price to show us more structure. Don't trade it. Don't be in a rush, right? Wait for price to showing us at least a double bottom or something. Or one thing that you guys can do is wait for price to close above this area, right? Wait for price to close above this area. And if price can come and take out of this liquidity right there, and you see price coming really fast to the downside and do this, then you know, guys, price will continue now to the downside, right? Then, as you guys can see right here, we have still liquidity under here. So there's still a higher probability that price can do that as well. Or you can take your build your confluence from our daily time frame. We can see this is an area of interest. We know this is an area of interest, but we must also keep in mind what is market structure is telling us. Market structure is basically telling us we are still basically bearish on our bigger time frame perspective, but on our smaller time frames we are basically building and continue trading to the upside. So now we can take advantage of that trades as well. But the main conclusion and the main aspects is to get in at the right time, right? You're gonna get in at any time where you think, okay, now it's time to basically take those trades. No, it's basically telling you is be patient and wait for proper setup and enter your trade, place a stop loss, and let this trade run and milk it out. That's why I want to show you guys this type of videos, because right, this market is really common, guys. Which is really common, right? This is like when I first started trading, and I didn't and I didn't even know there's type of market so simple and easy like this. So guys, if you guys want to see more of this type of videos on how to trade any synthetic market, guys, let me know in the comments down below, and I will show you guys what you guys can do with it, and you and I will show you guys how you guys can use, right, use the steps that I have here, all of the steps, right? The 6 steps, you can trade any synthetic market or even any forex market as well. You can trade with these steps, guys. With these 6 steps, you can trade any market. Trust me, guys. So, guys, thanks for watching. It's your boy FXGK Millionaire, and I'm out.